the technicality attached to insurance becomes more complicated.
Yeah.
Because the law of the land for each country is different.
Definitely.
Okay. The product structuring, the coverage, exclusions, warranties for each country is different. Multi-location, multi-continent, and multi-country. So insurance becomes complicated. Now, liability insurance to me is the biggest difficult part in this entire piece, because liability is varying from country to country.
Greetings. Welcome to episode 3 of InsureTalk by Beacon. In last episode, we unraveled the mysteries of business in terms of factories, supply chain, SaaS operations, how the risk is perceived for each of them, and how even one of them, if crippled, can topple down the business activities. In today's episode 3, we will be taking India on a global platform and talking about Indian interest abroad or global programs. In this, we will discuss how international programs and reinsurance can help Indian companies to reshape their programs worldwide. Today's guest doesn't need any introduction. He has been your host for the past 2 episodes. Please welcome Mr. Sanjay Agarwal, Promoter Director at Beacon and Board Member and APEC Director at Univa Partners. Sir, so we start with the first question for the topic. So I want to ask you that, can Indian business really get insurance for global operations while being based in India? And how does this work?
Okay, so interestingly, today's session is pretty, if I use the word complex, it won't be overstatement, because we are talking about a very niche line of business, and this question is very, very pertinent for any business owner who's looking to expand abroad and has a doubts about how this insurance can be structured or stitched. Okay, so answering your question, the first part of your question was, can Indian business be insured abroad? So yes, Indian business owners, international overseas operations, properties, manpower, etc., can very well be insured in India or abroad, depending on the regulation and depending on the complexity of the businesses which the business owner is having. How it can be done? So it can be done largely in maybe 3 ways. The simpler way I will tell, the simpler way is that the Indian insurance companies who are currently registered in India as per regulator have a special section in their portfolio which they term as Indian interest abroad. Okay, so to cover Indian interest abroad, they have specific provisions in their product structuring. So under the section of Indian interest abroad, they can cover the international operations of an Indian entity whenever an Indian entity intends to expand abroad. I would like to mention here that all the insurance companies do not have this facility. So that is something which is very important to understand. There are a very few insurance companies who have this facility and also the capability and the network, because you need all three: facility, capability, and the network, because tomorrow if there is a claim in that country, who takes care of that?
Definitely.
So there are very few companies, largely multinational companies, who have global presence, have the capability to insure these Indian businesses who are growing or expanding abroad.
Thank you. So now we have seen the first way. So other than that, what are the ways other than the IIA, or what we term it as IIA? What are the other ways the same owners can go abroad and take the global insurance, in terms of if there is any possibilities of reinsurance to be driven in this case, or is it just that it has to be in the same flow?
So this again can be achieved in a multiple ways. So one way I explained to you, which is called Indian interest abroad, or IIA as you were terming. The second one, and technically a similar one, is something what is called buying a local policy. So when you say buying a local policy, then the entity's local offices can get in touch with the local insurance companies or local brokers to buy a product which is suitable to them. This is good, but it has its own challenges. The first challenge is insurance is a complicated subject. Let us understand it very clearly.
Yes.
And as you go global, the technicality attached to insurance becomes more complicated
Yeah.
because the law of the land for each country is different.
Definitely.
Okay, the product structuring, the coverage, exclusions, warranties for each country is different. So when a locally placed executive of a client goes out to buy an insurance policy in a foreign land, there is a strong possibility that he could buy a product which would have gaps. So one way it is easy to buy, but second way is that he may not know the pricing, neither will he know the product. You mentioned reinsurance. The third way to do it is that many a times, if the Indian companies do not have the capability or capacity to insure a particular line of business in a particular country because of many reasons,
Yeah.
then they can resort to something what is termed as reinsurance.
Okay. So thanks. So now we have established that definitely Indian businesses can buy
Yes.
insurance abroad. So coming further from there, what are the type of policies which we are seeing, or what can be supported by the international operations in this?
So if you go by what is being bought by the Indian businesses or what is more popular, three products come to my mind. The first product is insurance for assets. So a business owner could have a manufacturing concern in an international market. Either they will take over or they will establish as a greenfield. The second could be a project. So suppose he is putting up a project. To give some examples, Indian entrepreneurs are today putting a lot of projects in foreign countries.
Yes. India is expanding everywhere.
Expanding
Yes.
everywhere. So, and they are also putting it as contractors. So Africa, after China, India is the biggest country which is putting projects there. So there are so many Indian EPC contractors who put projects in Africa, in all parts of Africa. So that is the second. Third is marine transit policies. Now, marine transit policies becomes complicated when you have transits in multiple locations globally. So if a client has 5 manufacturing locations world over, and transit is taking place from these locations to multi locations again. So from India, say, to Switzerland, Switzerland to UK, UK to Canada, Canada to US, so on and so forth. So this is multi location, multi continent, and multi country. So insurance becomes complicated because there are a lot of hoops which the product has to jump in order to ensure that the coverage is intact, the locations are intact, and the regulations are complied with. That is the second product. The third product, which is very, very popular, is liability.
Yes.
Now, liability insurance to me is the biggest difficult part in this entire piece because liability is varying from country to country. The laws are stringent in some countries very much. The litigious environment in some countries are extremely stringent. To give an example, if you compare India with US, so the liability incidents or an incidents when a third party sues you in the court in India vis-a-vis in US could be maybe 1 in 100. So if you are looking at US Canada exposure, then you need to have a proper liability program. So largely these three are the products which are very, very popular. To top it all, it is also employee benefits. So if you are putting one expat in a foreign country, or if you're hiring local people to work, each country would have its own regulation to protect the workforce. So you need to structure a program, an insurance program, which would protect those workers in those lands.
Definitely. So basically, now we have flown to the entire world. We have gone to Switzerland. We have gone to different places. So coming from that, just wanted to have your advice for a multinational program. Either it is better to use a centrally structured goal program, or it is favorable to have a separate domestic policy in each countries, so that it is where it operates. In terms of what is the cost and compliances, how does it affect on those programs?
So before I answer that, I would like to further delve into a concept of something what is called admitted and non-admitted. Okay. You ask regulatory. So regulatory becomes the most critical component. Second is the coverage. So let me explain to you what is admitted and what is non-admitted. Then this question would become easier to answer.
Easier to answer, definitely.
Admitted markets are those markets where the country laws protect the local insurance companies.
Okay.
So they ensure that any property located in that particular country needs to be insured by a company registered in that country.
Okay. So basically, you to say that it has to be bought from a local insurance company as per the regulation, depending on the products what we have.
Exactly. So that is what is called an admitted market. India is an admitted market, to give an example.
Yes.
So in India, if Colgate wants to establish a factory, they have to insure it in India only, just to give an example.
Definitely.
The second part of this is something which is called non-admitted.
Yeah.
So non-admitted means that there is no such restrictions. A MNC sitting out of anywhere in the world can buy insurances for the properties in a country which is a non-admitted country from anywhere in the world. So give an example, Singapore is a non-admitted market.
Yes.
So in Singapore, if there is a property, it could be bought by a country, by a company which is situated either in US, Canada, India, Philippines, anywhere. So this is a difference. So now, answering your question about global program and a local policy, first of all, let me explain to you what a global program is. Generally, what happens that when a client has multi-country exposure, wherein he would have manufacturing at maybe 5 locations world over, trading in maybe 4, 5, distribution in maybe 3, 4. So it becomes a multi-country, multi-occupancy, multi-businesses.
Yes.
Okay. One option is that he buys insurance locally in each country. Okay.
Yeah.
The second option is that he structures something what is called a global program. Now, what is a global program? A global program is one umbrella policy
Okay.
which covers all the locations
Okay.
and all the occupancies.
Okay.
Okay. Now, it is easier said than done because you have to consider a lot of aspects in it, including the aspects of admitted and non-admitted.
Non-admitted,
Okay.
yes, definitely.
The advantage of a global program is it is a seamless cover. Okay. The second advantage is the home country or the parent country's insurance team or executives have a full control on what is being bought locally.
Okay.
So the question which I answered in the first question, that if a executive of a client buys a local insurance, he's not aware what is covered, what are the warranties, what are the exclusions, what are the cost. Wherein when you take a global program, you are aware that these are the advantages, these are the coverages, these are the warranties. The third aspect is the cost. Now, when you negotiate a global program, since the volumes are big, the pricing could be favorable because in some countries the pricing could be soft, that means cheap. In some countries the pricing could be hard, means expensive. But when you structure it in a global program, you get the benefit of economy of scale or a benefit of averaging out. So the pricing is generally cheaper than what you get in a locally bought policies. Fourth advantage is our coverage conditions. Since you are structuring it intelligently, you are taking into consideration the exposure in each country, the technicality in each country, the complicated structure in each country, and then designing the program. So the coverage becomes very good. Also, the limits are better because you are buying for the highest limit and it is floating over the entire program. So these are some major advantages which you have when you buy a global program. However, if the business is not that well spread. So to give an example, if a client has two locations world over, okay,
Okay.
then it is advisable that instead of going for a global program, they should buy local policies using some local
Channels.
broker or whoever it is, because then he could get the benefit of pricing and he could also get the benefit of regulatory compliance.
So as it is said in insurance is basically a large number game. So same way in the global program as well, if you have many
Yes.
locations, it is advisable to go for a global program. Otherwise, it's better to go for a local policies in each state.
Absolutely.
Well noted your point. Coming back from that, we have already touched upon this topic, but how a reinsurance in these cases play a role for Indian business abroad? What is the role of a reinsurer or a reinsurance brokers in this? If you can enlighten that.
Before we delve deeper into this particular question, I would like to give a very brief introduction as to what is reinsurance, because I think that is also pertinent. Reinsurance is technically insurance of an insurance. So, giving it in a simpler way, when insurance companies are in business of risk. So, what they do, an insurance is a risk transfer mechanism.
Yes.
Okay. So, what they do, they own the risk of a client and promise him that in case of a claim, we will pay you. This is how an insurance works. But how much risk they can onboard would depend on the balance sheet, solvency ratio, and product they have filed with the regulator. These are the three things which becomes important. Anything beyond that, they would need to resort to something what is called reinsurance. Means they would then become a client and they would go to global giants to buy insurance of the risk they have taken. So this is typically how a reinsurance works. Giving an example, today let us take the example of say Reliance. So Reliance has major factories world over, and their asset size could be 1 lakh crore or 2 lakh crore. No Indian company has such a strong balance sheet to insure it, because if tomorrow a big loss happens
it
in
will
one of the
wipe out the-
it will wipe out the entire insurance company and the reserve which they have accumulated for 30-40 years. So what they do, they would keep a part of it, maybe 5%, 10%, and balance they will reinsure. And this reinsurance is also not given to one company, it is spread globally. So somebody would pick up 10%, somebody would pick up 15%, 20%. So this would depend first on the size, second also on the complexity. Now complexity, why complexity plays an important role? There are product expertise. To give an example, there is a product which is called kidnap and ransom. Now kidnap and ransom is a product which pays, if suppose there is a kidnapping, then the ransom which the client would pay is covered by insurance company. Now that product is not popular or not understood by a lot of local insurance companies in India and international. Whereas globally there are experts who know how to insure and manage. Okay. So if a client comes to an insurance company and say that I want to buy a kidnap and ransom cover, so they would have to resort to something what is called reinsurance. So this is how our insurance works. And of course, there are brokers who have expertise in finding the correct reinsurer to cover these type of risks. Relating this concept to Indian interests abroad. So there could be three different scenarios. The first scenario could be that a pharmaceutical giant looking to buy a liability policy for its global operations.
Okay.
Now, three complexities. First, pharmaceutical. Secondly, liability if the limits are big. I told you if the limits are big, the exposure is big. And third, multi-location. So, any country would struggle to structure such a program. Even the advanced countries like US, advanced countries like Singapore, advanced countries like UK would struggle to do it. So there a reinsurance comes into the play. So this entire program has to be structured from a reinsurance angle. Multiple reinsurers are likely to participate in this particular program. Wordings, coverages, exclusions are structured to suit the locations, the operations of this particular pharmaceutical giant, and that's how it is working. So that is one example. The second example could be that if suppose in any specific country the insurance company does not have a network and they want to insure a property in that particular country.
Yes.
In such cases also, insurance company would use something what is called reinsurance, because reinsurers generally operate globally. So these are two examples which I gave you.
Coming from the discussion which we had up till now, how a role of broker or their spread of international partners or what we are hearing in the market is broker networks or multi-location brokers. How does this help in for a broker or a client to have access to all the countries, and how they can help make use of this thing?
I think this is very, very pertinent because in any international operations, this plays a very important role.
Yeah.
Now, let me explain to you one thing, that I'll give you an example that any domestic broker who's working in India for that matter, or Singapore, or Philippines, or Indonesia, okay?
Yeah.
Indian client wants to set up a factory in, say, Indonesia, just to give an example. So first thing he will do, since it is insurance, he will go to his broker and say, Ki, boss, I'm putting up a project in Indonesia or putting up a plant in Indonesia. Can you get me insurance there?
Yes.
Now the broker in most cases would struggle to do it because he does not know what is the local regulation. He does not have a corresponding partner there. He does not know what could be the pricing, coverage and conditions. There a concept of a broker's network come into the play. So what are these broker networks? These broker networks are generally not-for-profit organizations who are a network of international brokers who come to a platform to help each member arrange coverage for the global partner in his country.
Okay.
So to give an example, if suppose the network partner of a German client puts a project in India, then Indian partner would help the German partner insure that project in India, and vice versa. There are many global networks. I'll give an example of one wherein Beacon is associated. It's called Uniba Network. So Uniba Network is a 35 years old network, present in 70 countries world over with around 80 partners. And the best part about it is that wherever the risk is, there is one partner to service it.
That's a good spread.
Yeah, that's a good spread. And this is where the network helps, because otherwise any homegrown broker would struggle to take care of the global need of a client.
No, definitely. I understand from the concept that if we are present in India, we cannot spread our leg everywhere.
Everywhere.
So definitely these networks
Would
helps
help.
us
Yes.
to make our presence globally. And definitely this is a good concept, and more or most international programs are supported by this
Yes.
network. So sir, how do you insurance differentiate between domestic and international exposures in terms of clauses, exclusions and ratings?
Okay, now please try to understand that each country would have its own rating structure. So I will answer this question from three different perspectives. One is rating, second is exclusions, and third are warranties and clauses. Okay. Rating is something what is called pricing in a common language. Pricing would vary from country to country. In some country, the pricing is hard because the claims experience, the cost of operations is high in that country. In some countries, pricing is extremely soft because of the excess capacity or competition or better loss ratios. So prices could be extremely variant in countries. So in India, if you can buy a product for a 10 paisa, in international market, it could even cost you 2 rupees because the conditions are different. As far as exclusions are concerned, so exclusions is governed by the product which the current regulator in that particular country is allowing. So to give you a simplest example, fire insurance. So India follows a specific coverage, exclusions, warranties, and for fire insurance, whereas the same is different for China, same is different for Korea, same is different for Singapore, same is different for Japan, same is different for London, UK. So there are different ways. So coverage exclusions would vary country to country. Of course, the client always has a option to structure and restructure the coverage. So he can, by payment of additional premium, he can delete some of the exclusions and put it in coverage. This flexibility again varies from country to country. For example, India would not have such a flexibility, but a UK or a Singapore or a China would have such flexibility. Another important aspect is something which is called deductible. Now, what is deductible? Deductible is the minimum cost of the claim which is deducted from a claim amount, or minimum portion of the claim which is deducted from a claim amount. Understanding it in a very simple example of a car. So when you buy a car insurance, if there is a claim, 1,000 rupees is deductible. So that is termed as deductible. For a fire claim, 5 lakhs is deducted. So that is called a fire deductible. Deductibles can vary significantly in country to country. So a developed country like a US or a Europe or a UK or a Singapore, the deductible could be as high as $500,000. Why? Because they say that we are not here to settle small losses. And the cost to settle a small loss in those countries are extremely high. Whereas in India, you can find a policy for 5 lakh deductible, which is technically $8,000, just to give an example. Last is clauses and warranties. Now, clauses and warranties are something which could be tailor-made to the requirement and the cost paying ability of the client.
Yeah.
India also, you can have a lot of add-on clauses to your cover, and similarly you can have a add-on to the main cover of clauses in many countries. So that's how the environment of insurance operates, multi-language, multi-global. That further significantly implies that the selection of the intermediary to structure a multinational program, either locally or globally, is very important, because if you leave it to the local person to buy it from local market, maybe he'll save 5%, 10%, but there is a lot of possibility that he will struggle to structure it in a proper manner.
Thanks for making us understand what the clause and risk and pricing effects on the things. So, giving from a nutshell that pricing and risk are both compared to each other. If you go for a higher pricing, you can get more risk covered. If you go for a less pricing, you have to compromise on the risk. So
Yeah.
that's what we understand from this, right?
Definitely, and it also has 3 more aspects. One is price, coverage. It also has an aspect of exclusions, aspect of deductible, and aspect of clauses. At this stage, I would like to give one example. Okay, so one of our clients acquired a manufacturing locations in one of the European countries.
Okay.
For confidentiality reasons, I will not name the country. Let us presume it was Switzerland. Okay.
Okay.
So the local program, when it was there, it was being managed by the local broker there, who was the broker of the parent company that time. When our Indian client acquired that particular plant, they approached us, said that why don't you study what it is, and can you arrange for alternate coverages and quotes for us to cover that particular manufacturing locations in Switzerland. So we again used our network partner. He went there, he studied the risk, and we were astonished to see 3 things. One, the program which the company originally had, which they had taken from their own broker, and the program which our network partner was suggesting was very, very different. The insurance program which our network partner was suggesting was much improved, better coverages, better clauses, and even the pricing was cheaper. So that was an eye opener, that if the concerned broker is not good enough or not intelligent enough, the client would suffer in terms of coverage and pricing.
So basically, the value is in the partners which you have. They
Yeah,
should be have at
yes,
par with the market, and it should
market,
have with the.
absolutely.
Thank you. Thank you. So next question. So what about the regulatory changes? Do you need to comply with local insurance regulations in every country you operate in?
So that's where that admitted non-admitted comes to the picture, which I explained to you. Regulation plays a very important role. Regulation would have two major components attached. The first component is something which is called compulsory insurances. So to give an example, in India, there are two compulsory insurances. The first compulsory insurance, or rather, I should say three compulsory insurances. The first compulsory insurance is what is called third party liability for the motor vehicles.
Yes.
So that is a compulsory insurance, means that if you do not buy this insurance, you are
Not allowed to apply on.
not allowed to apply, and you could be penalized. The second compulsory insurance is what is called Public Liability Act only. So a Public Liability Act only was structured in India after Bhopal gas tragedy.
Yes.
An environmental relief fund was put in. It came in 1991. That means that if any particular industry or a transporter is handling hazardous goods, they need to buy this Public Liability Act policy. And third important policy is workman compensation. So any worker, any company who's employing workers in its premises, they need to buy a workman compensation. So these three are compulsory insurance in India. Similarly, there could be compulsory insurances in all the countries world over, because each country visualizes the risk in a different way. Dubai, to my knowledge, has a compulsory requirement to buy a health insurance for its employees. Just to give an example. So any Indian multinational who's having an office in Dubai need to buy a health insurance for its employees. So their regulation plays an important role. Second is, again repeating, admitted and non-admitted. So if the client needs to comply with the local requirement in an admitted country, they ideally need to buy insurance from a locally registered insurance company. So even if they have a global program, the local leg or the part which is there in that particular country needs to be structured by a local company. So that's how it operates, and that's how regulation plays a very important role. And there are many books, or there are many companies who continuously publish what is the local regulation and how it changes from time to time. And again, their network plays an important role, because if you are part of a network, you can simply write to your partner and ask what are the compulsory insurances applicable in your country. He can write back to you.
Yeah. So basically, the having a partner gives you access to globe and gives you everything on ready
Exactly,
matter for you.
exactly, and intelligent answers.
And the knowledge sharing is same, so you understand each other better.
Much better, much better.
So moving on to the next question. What is the biggest myth Indian business owners have about insuring their overseas operation?
The biggest myth is मेरे business को कुछ नहीं होगा.
Yes.
And the second biggest myth is India से खरीद लो, सस्ता मिलेगा.
Yes.
And third biggest myth is my local guy is capable to buy insurances locally. These are the three biggest myths they have. But a lot is embedded into this. It is actually complicated. To understand the local regulation, to understand the product, to understand the pricing, and to select the right insurance company so that the claim is paid if there is a claim, is a complicated journey. The way it is complicated in India, it is complicated globally. So we need to be very, very specific, very, very cautious. And as the size grows, so initially, suppose a person puts up a project worth say $50 million. The exposure is high, but not that high. Tomorrow that it scales up to say 100 million. The exposure becomes much higher. The business owner needs to be sensitive about this. What insurance is he buying in the local place? What coverage is he adopting for? what is the price which he's paying, which is the right insurance company
Definitely.
to say to buy. Uh, Here, one thing which comes to my mind is very important. There is also a concept of rating of insurance companies, which is done by S&P, that is Standard and Poor, or AM Best. If you buy insurance from a company which is non-rated or does not have rating at all in international market, you run a risk of claims not being paid. So that person can give you any price because he doesn't want to pay the claim. And you sitting in India would never come to know whether that particular company is rated or non-rated, what is their history of paying claims, how are they settling the claims, are they asking too many questions, so on and so forth. So structuring the product, structuring the coverage, structuring the exclusion, finalizing a good price, and selecting an insurance company becomes the gamut of this entire insurance environment, which the client needs to be aware about.
Got it, sir. Is global insurance always more expensive than domestic, or can it be optimized smartly?
No, global insurance is not always more expensive because, as I told you in beginning, there are some countries where the pricing is very cheap. So if you buy a local insurance in that particular country, it would become cheaper. When you buy a global insurance, many a times it is observed that it works out cheaper than buying insurance in each country separately. Because again, two things we need to take into consideration. One is something what is called admitted, non-admitted. So it could be very, very tempting that the price of a fire insurance in, say, in Indonesia is 1% and in India it is 0.1%. So a client would say buy it from India. Perfectly okay. But tomorrow, if that policy is caught by the financial regulator there, your overseas operations would be in trouble because you are breaching the admitted concept. So the but when you take the concept of averaging, so you have 5 locations and you are structuring a global program for 5 locations from India, it will work out cheaper because what you are doing, you would get the local policies issued in that country being part of the Marshall Global Program, and also you will get the benefit of averaging out. So global programs at times, or I should say in most of the times, work out more economical than buying policies in each country. Also we need to take into consideration the coverage element because global program would have a much wider cover than a local program.
Yeah, so the concept of umbrella
Umbrella cover, as I told.
coming down. So how should business with overseas subsidiaries, JV partners, or foreign branches structure their global coverage for seamless claims and compliance?
Yeah, so best is to work with a broker or a company who has experience and expertise in structuring a global program. If you go to a partner who does not know what a global program is, you would also struggle and the broker would also struggle. So as I mentioned in earlier, there are some insurance companies and there are some brokers with good international network presence who could structure a good global program for an Indian client. And it is very important because if you structure it in a good way, the coverage is seamless, the pricing is good. One more thing we need to understand, the insurance company and the broker should have experience of doing international business. If they do not have experience, then again the struggle would be there. So Indian companies now is matured, quite of them are very well matured. They could give good international global programs, well structured with good local partners. And in case of a claim, they would ensure that their local subsidiary pays well.
So basically, the concept of Atatat Sarvatra is important to have a global program.
Global program, yes.
Great. Are there any specific industries in India like pharmaceuticals, SaaS, or logistic that need to act faster on securing international risk protection?
To me, pharma and logistics become very, very pertinent, even e-com. So pharma, why it is pertinent is because pharma, when you have a multi-country operation, The liability risks per se is pretty complicated because the litigious environment in all these countries could be different. So they need to structure a liability program in such a way that the coverage is very well structured, suiting the local regulatory framework and suiting the local litigious environment. One more thing is important is that liability programs can become very expensive because insurance companies would have, or reinsurance companies would have a perception that if it has a US exposure or a Canada exposure, the pricing, the possibility of claims is high. So what they can do, they would do is they would charge the same price across. So there, the smart structuring would help. So pharmaceutical to me is the most important and most pertinent from a global insurance perspective. Second is logistics companies, because logistics companies have storage across the globe and they transport or trade across the globe. There, if you have insurances which could be multinational programs from multi locations, then the seamlessness of coverage would be there, including the transit coverages, storage coverages, and in case of a eventuality, the coverages would pay better. Two cases which come to my mind is there was a fire in one of the warehouses in China, which led to a lot of disruption in supply chain. Similarly, a ship getting stuck
No.
in a canal in US did also disrupt the entire supply chain, and logistics companies were very badly affected. And e-com companies need to be aware about mainly two things. One, the cyber attack, because cyber is very, very biggest threat for them. And second is the risk of misdelivering, which is liability. So these are the two products. So e-com companies, which is globally present, pharma and logistics, are the most critically exposed industries which should have a well structured global programs.
What are your thoughts on the IT and ITS services companies, which they
Yeah, so IT and ITA services are more exposed to something which is called an E&O, or error and omission, or a PI, which is professional indemnity. Means that if your services or a software product has not been well received by your client and he puts a claim on you, which is called an error and omission claim or a PI claim, then it could become very big claim. And their multinational global environment is to be taken into consideration while structuring such a program. E&O policies are structured globally if you have companies which are global in nature, and they are taking into consideration all these aspects, that what is the exposure, what is the segment, what is the products which could be well suited to a global program or a global multinational. So yes, E&O for these particular clients is also very critical.
so you can basically you can say that commercial general liability, product recall or product liability, or professional indemnity, and marine
Marine, global marine to that, and storages at various locations. These are some of
So
the
these are the
important-
major risks which multinational should
Yes,
take care of.
yes.
Going on from questions answer or the Gyan session to the most famous couch section, which is called as rapid fire.
Okay.
So ready for the global rapid fire, sir?
Yes, for definitely.
So moving on, easiest global cover to get from India,
I think it is marine insurance.
most complex one but worth it,
Cyber insurance.
one compliance mistake to avoid overseas.
I think we need to be aware about the admitted and the non-admitted, because many countries admitted product being bought from a non-admitted perspective can lead to a jail also.
One underrated global risk which you perceive in 2026.
Property prices are softening world over. So I feel the pricing would continuously go down world over. So to me, in 26, property insurance pricing would be the least or undercut or underrated, as you said.
One country that's strictest about insurance regulation.
To me, it is US. Because US has one more complication. I think it's a good point to tell that. US has many states. Each state has its own laws, its own insurance regulation. So the partner, a US partner, ideally should be present in all the states to serve the interest of the client properly. Otherwise, that partner may not be in a position to quote or arrange insurance for a premises in some other state where they are not present.
Great. So from that, time to wrap up, sir.
Okay.
So wrapping up with some practical advice.
Hmm.
So what would you say to an ambitious founder looking to expand internationally in next 12 months? What should they do today?
Interesting question, because if you try to understand it from a entrepreneur's perspective, first thing, whenever entrepreneur intends to go global, is he does a market survey. He feels that his product proposition or the service proposition is worth to go global. He understands that if he establishes a manufacturing location in a country which is other than its home country, maybe to give an example, Vietnam, other than India, he would be more benefited from the overall business perspective. So his entire focus is on three things. One, what is the regulation? What is the business framework? And how can he make his global operation viable and conducive to his Indian operation? He tends to forget insurance. So my advice to any ambitious entrepreneur who's thinking of going global, he should also consult his broker or his insurance company about the insurance environment in that particular country. What are the compulsory insurances he should buy before going there, and how can it be bought either by using a network partner or by help of a local broker or whatever it is. So to me, this is the most important aspect which generally entrepreneurs tend to forget.
So in homework, it is not only compliances for the setting of a company, but it also is advisable to do the homework on the insurance regulation and framework of that country as well.
Absolutely.
For going
Absolutely.
ahead.
Yes.
So the same thing, the same thoughts might have been gone between you and Rastogi sir when you set up your office in Dubai.
Definitely, because since we are from insurance fraternity, so this was the first in the mind that are we going wrong? So we did take into consideration couple of very, very interesting aspects of it. As I told you, first of them was buying a health insurance for our employees there. Second was buying a effective error and omission or a PI policy there, so that if because of any of the advices given by any of our employees, it could lead to claims. And third is that our office is set up in DIFC, which has its own regulation. So third was taking into care the specific regulation applicable to DIFC.
Yes. Sir, now going to the bread and butter. So can broker play a bigger role in helping Indian business think globally and insure globally? How?
To me, broker from an insurance standpoint plays the most important role for a client who's thinking to go global. The main reason is five. One, when during our discussion we could clearly stipulate what are the roadblocks, what are the pitfalls which an entrepreneur could face in the journey to go global, and a knowledge based broker with a good global connect can make this journey seamless for the client. So the role of a broker becomes very important because he needs to understand the environment, he needs to understand the risk exposure, he needs to identify a good local partner, he needs to take into consideration the local regulatory framework, and then he needs to structure a program so that it mirrors the program which is there in India or the home country, and ensures that the coverage is seamless between both the countries. So, role of a broker to me is the most critical aspect in this.
Great, sir. Thank you. Thank you for parting your knowledge to us on this subject. And definitely, we hope we are able to gain something out of it and have a good experience in the market for that.
Thank you, Rishabh. And I think in this discussion of around 1 hour, we could unravel a lot of topics. We could discuss a lot of nuances which are critical to an international program. And I hope that the listeners to this podcast would benefit out of it. At least some part of the podcast would be applicable to all entrepreneurs who are either global or thinking to go global. Thank you.
Thank you, sir. Heartily thank you to Mr. Sanjay Agarwal for sharing his knowledge and experience in the global insurance and reinsurance ecosystem. Today's session gave us an insight how an Indian business can secure themselves abroad, taking in the risks. As we are seeing, India is progressing outside beyond borders, and how insurance can help them in safeguarding their economy. Thank you and signing off.